Peyto, the Canadian energy company, has been trading around $18 today, up at about $18.06 right now. There are some who say it could hit $19.50, which is why BMO's upgrading the company to outperform. Peyto is doing well with its 2023 acquisition of something called the Repsol Deep Basin. We're going to start with our guest there about why that is. And Randy Ollenberger joins us now. Thanks for your time.
Pleasure.
Talk to me about the Deep Basin and what they're seeing there.
So, Peyto's always been a core player in the Deep Basin. That's where all their assets are. At the end of 2023, they bought the assets from Repsol, which is a Spanish oil and gas company. Those assets were used to be owned by a company called Talisman many years ago. And really, Repsol hadn't invested a lot of money in those assets. They provided a really good fit with Peyto's asset base. And what it's allowed Peyto to do is improve its overall productivity by about 25%. So they've improved their productivity on the Repsol assets by about 50%. The Repsol assets represent about 50% of the company's asset base. And so that's driven an overall improvement in their productivity. And that's from a company that already is peer leading in terms of costs, returns on capital, and so forth.
Okay, so what is that doing to its target for debt?
So, Peyto is, trying to bring their debt down following that acquisition. They're planning on bringing it down to about $1 billion, which is 1x EBITDA. We believe they should be there at the end of this year, in part because of that strong operating performance, but also because they're so well hedged. So they really don't have a lot of downside from a commodity perspective. And that hedge allows them to reduce debt, cover their capital program, but also sustain a very attractive dividend, which last week was yielding about 8%, a little bit less than that today with the upward move in the share price.
Okay, do you expect their dividend to stay the same?
Well, we certainly see the opportunity for them to start growing that dividend in 2026 after they hit their debt target. We estimate they're going to be generating about $300 million plus of surplus cash flow in 2026. So that would certainly allow them to grow the dividend in 2026, as well as perhaps think about growing the company a little more quickly, or perhaps paying special dividends to shareholders.
Okay, so let's talk about the wider picture here. We've seen oil go on, quite a ride down to the mid-60 level at some points. What's been happening though with natural gas?
So, natural gas in the United States has been on a very strong price trajectory this year. We've had some colder than normal weather in North America. As many know, we've seen some very good strength in the international market. And what we've seen is Henry Hub prices really move closer to international prices, and that's expected to continue as new LNG comes on. In Canada, we've lagged. And in Canada, we've lagged because we have too much supply right now relative to our ability to move it out of the country. That will change when LNG Canada comes on, but that's not really something we're going to expect to see until maybe the fourth quarter of this year. So Alberta gas prices will probably stay weak relative to Henry Hub prices until that time.
Okay, so what about the threat of tariffs on energy exports? What do you expect there? How much could it hurt a company like Peyto?
So, tariffs, obviously, we're waiting to see what happens on April 2nd. We don't think tariffs are going to have much impact on gas producers at all. I mean, as I said, AECO is already trading at a pretty big discount. The United States needs gas from Canada, particularly in markets like California, where they can't really get it economically from alternative sources, the Pacific Northwest. And we believe, in fact, that Canada won't have enough gas to go around. So at the same time as, the U.S. government might be putting on tariffs, we may be saying to the U.S. consumer, we actually don't have enough gas to give you. We need to keep that home. So I think that pricing power really is going to reside with Canadian producing companies once LNG Canada comes online.
Okay, Randy, I do have to leave it there. I'm out of time with you. Randy Ollenberger is the Managing Director of Oil and Gas Equity Research at BMO.